Shirley Weber, from your perspective, I mean, as a bank, bankers by nature are conservative. They worry about the risks. Miners, by their nature, are people who like to go and dig holes in inaccessible places on the promise of a reward into the future. How is this balance going to work out in an environment where Tawanda suggests that we've got artificially inflated prices as a result of short-term supply constraints that invariably are going to come off as we see infection rates drop or as we see vaccines develop to fight COVID-19? What is your perspective on it?
Thanks, Bruce. For me, we obviously have existing, mines out there. And as Bevan and Ilja has both mentioned, they're looking carefully at expansionary capex. Efficiency is more important now. Cash flow preservation is at the order of the day. So what we are foreseeing and already starting at this point in time are more and more projects being looked at, not necessarily for developing now, but making sure that in the 12 to 18 months, that the companies are ready to actually take advantage as soon as demand is picking up for those commodities as well. Like you've rightly mentioned at the beginning, we've seen copper keeping its own as well as iron ore. However, we've seen in the last week as well that iron ore is dropping in prices. And that's a bit of an odd phenomena because of what Tawanda has mentioned on the Chinese and the requirement from the Chinese government, for iron ore and steel, etc. I do think for our African continent, and we've seen it where we've got our Absa activities in many of the countries, that if there's no political stability and a regulatory environment that's very clear, that investors will not necessarily go into those countries and help economic growth. And surely growth for all our African countries are of the utmost importance.
Talk to me about the regulatory environment in countries. I mean, South Africa, controversially, has had multiple attempts at regulatory regimes which have been disastrous under Mosebenzi Zwane, who was briefly South Africa's mineral resources minister. It became almost impossible to ever consider investing in South Africa again. We've had Gwede Mantashe as Minister of Mineral Resources for 2 years now, and still one gets the sense that there hasn't been sufficient progress in South Africa when it comes to certainty around policy. Just how much certainty do we have, first, Shirley Weber, in South Africa versus other countries on the continent, perhaps taking this opportunity a bit more seriously?
What we've seen over the last few years as well, and I think I've mentioned this a few times, I think there's a positive sentiment on South Africa. The mining charter, as well as the petroleum charter, fuel charter, and everything, regulation-wise that's coming out, I think is becoming more clearer. I do think with some of the gas finds that we've seen on the Western Cape side, that it's all positive. So from a bank point of view, I think we are definitely more positive about, the certainty of regulations. I think in Africa, there's one or two precedents that's been set. Where government involvement, for example, is increasing up to a 50% level. And I do think as well, economic growth for the countries is one thing, but you need the investors to go in, obviously make sure that everyone's got fair and equitable shares of profit, etc. And that's why sanity needs to prevail when it comes to fiscal regimes, royalty taxes, etc. And we've seen a few countries, for example, like Zambia. I think we're positive about that. We've seen countries like Tanzania, for example, where and we all know this, Barrick has struck a deal, with the government, for owning 50% of their mines, where there were issues in the past on tax disputes, etc. So I do think each and every country need to evaluate very carefully what they would like to achieve at the end of the day, because all the communities need to benefit as well. And it doesn't take anything away from sustainability, because sustainability, and sorry, it's quite a big word. Sustainability doesn't just mean carbon emissions. It means, things for us like Absa. It should be zero hunger. It should be education. It should be, carbon emissions. Sustainability is quite a big word, and we would like to think that, as part of our role into Africa, that we contribute to all of those as we look at certain projects and the way that we fund them, and making sure that we are responsible in lending out to those various projects.
Ilja Graulich, I mean, is it easier to do business in South Africa as a mining company than it was 5 years ago, 10 years ago, 15 years ago? Is South Africa boxing smarter than perhaps it has in the past?
I think it was always possible to do business because we have essentially a constitution that enforces and entrenches laws, and the legal system did allow you to challenge what some people may have thought were not the correct applications of laws. So I think that's an important factor to consider. I think it was more the PR around how things were handled previously that meant there was lack of investment. And I think we're also still suffering from some of the legacy issues where South Africa was dominated by large mining houses, and we simply did not have the culture of junior mining companies coming in. And that culture is not just from an operational perspective, where you do have, as you described, quite aggressive mining companies, very keen to start digging a hole wherever they think it's possible. It also stems from the providers of capital, and the providers of capital both being equity and debt side, where we have traditionally not seen the large funds and the banks come in and support the junior mining sector. That has changed, and that certainly means that there are more entrepreneurial companies coming into the South African space and trying matters. We've seen success stories. Let me blow our own trumpet. It's quite important. We have seen success stories in chrome and platinum, as Tharisa has shown. We are a product of the new mining code, so we had to be fully empowered before we received licenses. Yes, there was a major shareholder providing capital, but we did receive very good support from the capital markets, particularly on the debt side, to start building the mine, where we created 2,000 new jobs. You've seen success stories on the manganese side, and you've seen success stories on the coal side, where I guess the certainty of a supply contract from an Eskom for particular BEE companies has meant that new entrants were able to come into the market. So it's been a very positive swing, and I think we can build on this. There are opportunities all across the sector. You've seen opportunities coming up in the copper space in South Africa that is being supported by the capital markets, and hopefully we can build on that. So it has certainly changed, and I think importantly the tone, both from the industry through the Minerals Council, the industry individually, and obviously from the government, they do want to see investment, and we're certainly moving in the right steps on that side.
But it's still harder than it should be, right? Ilja?
Look, it's never easy. I think that's the important factor to consider. But it's not easy in any other places. Over the last week, if you followed what's going on in North America, a major project, great from an engineering point of view, great from various other scenarios, they're now hitting stumbling blocks on some of the social issues, and that share price has collapsed of that company. So it's not easy, and that, to be quite frank, is one of the reasons why I remain bullish on commodity prices. As much as we are looking at projects as an industry, and Shirley addressed those as an industry as we move on, those projects we know will take longer to come to the market than what any bullish scenario shows. So the underpin from a supply-demand fundamental, in my view, remains very, very balanced for strong commodity prices.
It's a good argument. Tawanda, I mean, when you look at the duration between discoveries of commodities, let's, for example, just take the Brul Pada. I don't know when that discovery happened. It happened years ago. And just in the last couple of weeks, we've seen the deep sea Stavanger make its way around Cape Town, and it's going to go and find itself into the middle of the South Indian Ocean. And then that's when the real work begins. I mean, this is from conception to actualization. I mean, these things take years of planning, of fortitude, of hard work, of funding. And somehow we don't seem to grasp the nettle on these things. We don't seem to grasp the sense of urgency when it comes to getting new projects on stream, do we?
No, you're right, Bruce. You know, from a timing perspective, these things really do take time. I mean, just by way of example, I mean, you know, for some of the platinum mines, just to actually start getting to profitability, just given, you know, how deep they generally are, I mean, that can take you a period of about 7 years. So, I mean, in that 7-year period, you pretty much need a whole lot of commitment, you know, from a capital perspective. You need support from, I think, a whole myriad of factors. So, you know, like you talk about what is government support, you know, from a regulatory perspective, you know, in that environment. And you really are looking at how do you incentivize people to slug it out for that 7-year period. And some of those breaks come, you know, from, you know, tax breaks, which you can maybe roll over and then claim once you start mining.
I mean, it takes a huge and long time and a huge commitment. Shirley, I saw your head almost nodding off its shoulders just a moment ago as I was talking about the amount of time that it takes to get projects to market. I mean, do you get a sense that there is an acceptance amongst the regulators that this is not a 2020 cricket game or even a 50 over one-day test? This is a proper Ashes series over 100 years game, perhaps.
Look, Bruce, you know, for any new development, exploration obviously is over and done with. For example, with Brulpada, there will always be, you know, new fields around it, you know, that can form part, you know, of that discovery. But the reality is, we should realize that it's on the Western Cape side, you know, the weather, you know, the seas, the depth. Everything plays a very big role in, you know, how companies can progress, you know, to make it quicker. If I look at, for example, in Ghana, you know, when we funded Jubilee, the Jubilee field, for example, you know, from discovery to first production was 5 years, and that was extremely quick. So when we dealt with clients like Cosmos, for example, that's obviously very big on the Jubilee side. You know, 5 years was such a dramatic achievement, you know, for the wider oil and gas community. So it does take a while for those things to be fully developed.
Bevan Jones, tell me about risk appetite for Africa projects across our continent, because this continent is rich in so many resources. And you mentioned some of the really rare minerals that are under African soil that are imminently exploitable in this environment where the Paris Climate Change Accord demands that we are smarter about the way in which we develop our products into the future, the way we consume, the way we develop. This African continent is magnificently endowed with mineral resources. But just what is the appetite? I mean, what is the risk appetite right now for African projects?
We are still well endowed, and we have a very wide range of resources still available to us. Unfortunately, I think Africa still gets hit by this risk on, risk off sort of sheep mentality that most investors have out there. But of course, you have your traders who are all over Africa with boots on the ground looking for these opportunities. And they tend to be very bullish and risk pro risk. China, of course, has always been prowling through Africa and is looking to secure its resources that it doesn't have at home. So I think the risk mentality is still there. But to your earlier point, in terms of government, they are not really helping. I mean, the regulation is still muddled. We don't have a great cadastral system in terms of mapping and in terms of licensing, whereas other African countries like Botswana and Tanzania, they've put it all online, and you can go and search for who's got what mining rights and permits, etc. So it's a lot easier in many other places. Botswana, Namibia are looking at signing a 5 gigawatt renewables project between themselves, and then possibly exporting that power into South Africa. So in many ways, South Africa is getting left behind, even though that the risk appetite is there. So we really do need to try and make it easier for investors to come on board.
Tawanda, talk to me about macroeconomics. Talk to me about the sort of hardship that economies like the oil-dependent economies of Nigeria, for example, Angola face. And we've even seen ShopRite announce that it will withdraw from Nigeria. I mean, it just feels like so many of these building blocks that have been put in place for so long in anticipation of this boom that will come one day are beginning to unravel a little bit and come off a lot based on the boom and bust cycles of commodities. In this case, the negative impact of oil, which is so critical in some economies in this continent.
Yeah, I think the impact has been, quite severe. When you look at countries like Nigeria, Angola, which are really dependent on oil. I mean, just given the current drop in oil prices, I think most of them are facing real uphill challenges in terms of they need a certain oil price in order to balance out their budget, which I think currently neither Angola nor Nigeria, being the two largest oil producers in this country, aren't able to balance their budget. I think the consequential effect of that really is about them having to seek, alternative funding. I think, like us here recently in South Africa, they'll be leaning more and more towards IMF funding. And, that also has its own consequential impacts in terms of, there's a push-pull in terms of, what IMF ideally would be advising you what to do and what you as a government from a social perspective would want to do in order to restructure your economy, maybe to be less dependent on oil. You look at places as well. I think some of the projects now at this current oil price aren't going to be or are no longer in the top tier of priorities for some of the majors. So you look at some of the countries in East Africa which we're expecting, to be getting all this new investment coming into the country in order to help out from a social development perspective. That event is pretty much being deferred out a couple of years. So I think, the consequences aren't great. But I suppose it's your view in terms of when you think we'll get out of this oil glut, which really is, I think, at this current moment, I think the big word for us is really around COVID and how long are we going to be in this COVID environment, or what is going to be the new normal in terms of to reset some of these things.